I think old habits really die hard. And we have the Bank of Japan back doing QE, printing up money once again to buy bonds. And things are really bad in Japan when even the Federal Reserve is doing a much better job than the BOJ. Now, the BOJ, they are on borrowed time and is reverting to printing money. Kuroda has effectively lit a fuse on the global bond market because sooner or later, he will have to pivot, guys. And this is truly a case of stubbornness and a refusal to surrender to reality, right? You cannot print your way to prosperity. Abenomics is not working and the markets are not stupid. So the Bank of Japan is holding on to their yield curve control policy while sacrificing the Japanese yen. They are refusing to hike rates and they are still going to leave their benchmark rate at a negative 0.1% and push down their 10-year yield to 0%. And that means if you buy the 10-year JGBs, you're going to be an absolute clown because the BOJ wants you to enjoy zero yield. And the market knows that. The yen immediately crashed versus the dollar before rebounding, but this devaluation of the Japanese yen likely isn't over yet. And the big problem with Japan's delay tactic is that interest rates are rising across the world, and when rates rise, it is adding a lot of pressure to the economy. People are afraid to borrow, spending comes down, and companies can't grow as fast. And if Japan was to suddenly hike rates, it could trigger a bond crisis and collapse global bond markets. Japan's pivot could be the straw that breaks the camel's back. And the problem with the BOJ is their refusal to see the situation on the ground. They want more inflation in Japan because somehow, just somehow, they can't see inflation staying above 2% in a sustainable manner over the coming years. And this is dangerous because Japan's core inflation has already reached a 41-year high. It is now at an incredible 4%, and it is causing a cost of living crisis for people in the country. And this is what happens when you rely on MMT, when you believe you can print your way out of a recession and stimulate artificial growth. And it is the same situation as the United States back in 2020 when the Federal Reserve bought trillions of bonds to push down rates to near zero, right? We all remember that. And now we have an inflation hell like no other. And in fact, Kuroda mentioned something very disturbing before he flew on his jet to Davos, right? He said, I think yield curve control is entirely sustainable. And this tells us that he's going to keep pumping money to the system because he wants to see wage growth in Japan. He wants to see companies pay their workers more because Japan's wage growth is horrible. And we can see that in 2020, wages in Japan were the same 2 decades back in the 2000s, while salaries in the rest of the world are scaling for inflation. And according to the BOJ, this is a problem because consumers have no money to spend. But because the BOJ is trying to manipulate interest rates, because they are pumping so much money to the system, investors with half a brain, they are leaving the Japanese markets, right? They aren't buying bonds, they aren't buying stocks, they are pulling their money out of the system. And if anything, they are betting against the Bank of Japan. Now, when investors decide to leave Japan, it crashes demand for the yen and pushes prices up for the local Japanese people, right? This means an inflation nightmare for people in Japan because of a currency devaluation. Japan is a net importer of food, fuel, and commodities, so they need to swap their yen for dollars to buy them. And as the yen collapses, they can buy fewer inputs for their economy. Now, the BOJ is causing higher inflation well above 2%, not really because of keeping rates low, but because they are lighting the yen on fire. And this is the big issue I have with just printing money and asking companies to raise wages. Japan has been calling for a wage increase of at least 3%, and yes, the big corporations, they are bowing down to his request. But let's get real for a moment. If wages go up by 3%, but the yen has collapsed by 10 or 11% to the dollar, you might still be experiencing a lower standard of living. So let's try to understand Japan's battle for higher inflation, right? How is Japan going to stimulate their economy? Because their new approach is truly terrifying. I used to think the Federal Reserve wasn't operating in reality, but compared to the BOJ, I have to give Jerome Powell a 5-star review. Compared to Kuroda, Powell is doing a fantastic job. Now, this horror show comes in two parts, guys. Firstly, the BOJ is going to keep buying an unlimited amount of bonds to keep the 10-year JGB yield at 0%. And if we look at the 10-year yield, it is at 0.4%. So the BOJ is going to print up as much money as possible to fight against market forces who are selling to buy up bonds. And this is called yield curve control. This is not genuine demand for the Japanese bonds because the market knows this. The BOJ, they have become the buyer of last resort for the Japanese government. In fact, if there wasn't a BOJ at all, yields would probably be well above 3 or even 5% because Japan's economy is starting to shrink. No one in the right mind wants to lend money to a country that is contracting without demanding a higher yield. And that's why we are saying that the Bank of Japan, the BOJ, they are trying to defy gravity. But wait until you hear the second part, guys. The BOJ is trying to get the private sector to help out with their yield curve control. And the idea is simple. The BOJ wants to offer ultra low interest rates to commercial banks to get them to borrow cheap money and then use the cheap money to buy Japanese bonds to push down the yield. And not even the Federal Reserve does this. The BOJ is essentially offering free money, right? Free cash to the banks to use money in the private sector to artificially generate demand for Japanese bonds. So if the commercial bank can borrow money from the BOJ at like 0.1% for 10 years and buy the 10-year JGB at 0.4% yield, they have made a risk-free trade of 0.3% courtesy of Kuroda. And we need to see how ridiculous this is. This is not organic demand for Japanese bonds. The big banks aren't using their own money. It is still coming from the BOJ. And on top of that, you are giving them free profit while expanding the money supply, right? So just imagine if you're a foreign investor and you see all these shenanigans, you'll definitely want to run away from Japan. And if you think it can't get worse, it definitely could. We have Kuroda saying, I won't rule out the possibility of negative rates being applied to the fund supply operation. And that means the BOJ might not charge any interest rates to the big banks and might even pay them money from the BOJ to push down bond yields. Ladies and gentlemen, this is next level QE and we have reached the economic twilight zone. And this is why I cannot take the Japanese economy seriously. And many other investors, they are betting against the Bank of Japan. They know the Japanese bond market is finished and it's just a matter of time before Japan surrenders to inflation. We have UBS and Schroders piling on more short bets on the JGBs, understanding that the BOJ will capitulate. They understand it's just a waiting game because the longer Kuroda refuses to raise rates, the worse the pivot will be. It's like a spring, guys. The further you compress it, the higher the bounce will be when you let it go, right? Japan might be able to keep its bond yields down right now with money printing, but the market will punish the yen for it. What Japan is trying to do is gamble with the world. The BOJ is betting with the market that they can entice their own banks to keep rates down forever by pumping them full of money. But the markets will win. They always win because now the interest rate differential between Japanese bonds and Western bonds is getting worse. The Federal Reserve is going to keep hiking at least for a few more quarters, and this will cause investors to dump Japanese bonds for US treasuries. Now, in fact, it's even better to dump now because the BOJ will clean up the mess and buy back the bonds to keep the yields low, right? And this is why Japan will likely pivot sooner or later because the yen will continue to get hammered and local inflation will keep soaring. And the big blind spot that the BOJ isn't saying is that the yen isn't very valuable. The yen is not the US dollar. There isn't a consistent demand for it to be playing such games. Countries around the world need dollars because the majority of imports and commodities are still priced in dollars, and over 60% of foreign debt is also denominated in dollars, so there is a constant stream for demand for the greenback. But the yen is very different. If the JGBs are yielding nothing and the yen is collapsing, there isn't any incentive to hold yen. Investors will sell it away, making the collapse even worse. And this is where things get really scary for global bonds. The thing about Japanese investors is that they hold a lot of foreign bonds like US treasuries, and there are also tons of traders who are part of the yen carry trade. Essentially, they borrow the Japanese yen at cheap rates, sell it for dollars, and then buy into US treasuries because the yield is so much higher. So just imagine, guys, what happens when the BOJ decides to pivot and hike rates. These two pillars that are supporting US bonds and other foreign bonds will collapse. Suddenly, the yen will start going up, and that will cause Japanese investors, Japanese banks, and pension funds to pull money away from American bonds because the yen is appreciating and they need yen to settle their obligations. We are going to see money flow away from foreign bonds. Now, even back in 2021, Japan held over $2.7 trillion worth of long-term foreign bonds. Plus, if the yen carry trade is over, less money will flow into US treasuries and that could spike yields up even further. This is really scary news because we don't know what the tipping point will be for the coming recession. Will the BOJ's pivot cause a sovereign debt crisis? Or will it be triggered by a banking collapse because all the institutions they are leveraged up on treasuries or JGBs, right? We really don't know because everything right now is one big black box. We can't see what's below the surface on the balance sheet of banks and pension funds, right? All we can say is that the BOJ, they are playing with fire, not just with their own currency, but the global bond market as well. So I think inflation is going to be an ongoing problem in Japan because once again, guys, you cannot print your way to prosperity. Japan is really caught in a nasty position. If the Japanese economy really collapses due to rising rates, now they also have an inflation problem that just won't disappear overnight, right? Even the Japanese government is afraid of stagflation, which could very well happen. But the BOJ's policies just don't make any sense. Even if you get wages up by printing money, the yen is still devalued, so purchasing power is still compromised. And I think Japan is learning a hard lesson that you can't throw money at every problem. They have a fertility crisis and an immigration problem, which are all contributing to a shrinking economy, right? You cannot conjure up new human beings by keeping interest rates low and printing money. The only thing that you'll create is an inflation crisis. So let me know what you think in the comments below. Will Japan keep printing money or will they pivot eventually and start hiking rates to save the yen? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.